The next year and a half will be painful, but it will pay off in the long run because Musk will continue to innovate, especially when it comes to Cybertrucks. After all, if you give them the microphone, you never know what will happen. Sure, adoption of EVs is higher than 25 in China and Europe, and 7.6 of passenger vehicles sold in the US last year were EVs. However, even after accounting for the costs associated with interest rates and the expenses that come with them for the consumer, the two biggest expenses on the EV side are knowledge of the SL charging infrastructure. We have a thrilling video ready for you to watch right now. Famous analyst Ives has made an audacious forecast. In this video, we'll take you on an exciting ride through Tesla's recent victories in the Chinese market, where insurance registrations are soaring, signaling a potentially record-breaking quarter. But that's not all. The Cybertruck is revving up to change the game, and fully autonomous technology is set to redefine the entire industry. Why might Tesla's stock double January? Well, it all comes down to Tesla's Q4 performance, which appears to be surpassing expectations in ways you might not have imagined. What effect might these events have on Tesla stock? Dan Ives' forecast that a stock market boom would occur comes true. Join us as we solve these mysteries and provide an overview of Tesla's historic journey. Tesla is soaring to new heights thanks to its innovative strides and calculated actions in Q4. There was only one way to learn, so remember to like and for the most recent information and professional analysis, subscribe to Tesla Stock News. Let's explore the fascinating world of Tesla while we excitedly await many are wondering whether this... We'll see another record-breaking performance after Tesla's Q4 deliveries and profits announcement. Turning to Elon Musk, the man who leads Tesla, the company has continuously exceeded expectations by overcoming obstacles like the pandemic and chip shortages while staying at the forefront of automotive innovation. His unconventional approach has often resulted in controversy, raising the important question of whether Musk's distinctive style draws in customers or turns them off despite the arguments. Musk has unquestionably had a significant impact on Tesla, particularly with projects like the eagerly anticipated Cybertruck. Recent actions such as purchasing Twitter and his outspoken personality have further added an element of unpredictability to Tesla's journey. However, as we ponder these points, we also need to take into account the larger picture of the electric vehicle market in North America. There are signs of shifting consumer demand for EVs, and companies are adapting by lowering prices and reassessing their billion-dollar investments in EV technology. Will navigate through the complexities of Tesla's current position and speculate on its future to ensure our viewers are well informed about one of the most dynamic companies in the world today. Let's turn our focus to the electric vehicle market in North America, particularly the United States, where the dynamics are rapidly evolving despite significant strides in EV adoption in regions like China and Europe, where the rate exceeds 25. Tesla's upcoming report is not just about numbers. It's about understanding the future trajectory of the EV market and Tesla's role in shaping it together. The US EV market faces two main challenges: the cost of vehicles and concerns about range, charging infrastructure. These issues, when combined with external factors like interest rate fluctuations, are creating short-term headwinds for EV adoption. However, there is a bright side. An increase in model availability from both startup EV manufacturers and legacy automakers is expected to bring advanced technology to more affordable points. The US trails behind other countries with about 7.6 out its passenger vehicles being electric. This disparity raises questions about the factors influencing the American market. A major step forward in strengthening the country's EV infrastructure has also been represented by the US government's commitment of $7.05 billion to the National Electric Vehicle Infrastructure NEVI funding. This strategic investment is expected to be crucial in removing one of the biggest obstacles to the widespread adoption of electric vehicles. The accessibility and availability of outlets for charging a substantial percentage of this investment will go towards expanding the nation's EVU charging station network. This expansion aims to eliminate charging deserts by strategically placing charging stations so they are accessible in both urban and rural areas. A portion of the money is anticipated to go towards creating and implementing quicker, more efficient charging technologies. These advancements mean shorter charging times, which makes EVs more practical for longer trips and daily use. The investment's main goal is to guarantee equitable access to EV charging infrastructure with a focus on rural and underserved communities. By addressing range anxiety through a more robust charging network, this strategy seeks to close the adoption gap between EVs and various socioeconomic sectors. This investment is likely to boost consumer confidence in EVs, which is crucial for increasing EV sales and moving more drivers away from traditional combustion engines. This government initiative may also act as a catalyst for private sector investment in EV infrastructure, leading to further advancements and innovations in this field. The U.S. government's $7.5 billion investment in the national electric vehicle infrastructure funding is a significant step towards a more sustainable and EV-friendly future. It promises not only to enhance the current EV charging infrastructure, but also drive innovation, economic growth, and a more equitable distribution of EV, laying the groundwork for a more environmentally friendly and interconnected transportation network as we learn more about the impact of the active interest rates on EV pricing and sales, as evidenced by the recent changes in vehicle pricing strategies and consumer incentives. Higher rates present a challenge. While the return of $7,000 from $500 federal tax credits is a welcome relief for consumers, eligibility requirements and price points still need to be taken into account. Automakers developing methods reflect this shifting terrain. Some, like Ford, have adjusted their sales approaches in response to market demands. Tesla intends to increase manufacturing of its Model I and Model 3 automobiles in order to meet its goal of delivering 1.8 million vehicles by 2023. To reach this goal, Tesla's new plants in Texas and Germany are essential. These two models, which make up 95%, the company's entire output, include the company's performance in the upcoming years, will be largely determined by its ability to handle the complicated interaction of production capacities, market demand, and economic considerations, which is central to its strategy. According to Tesla's production plans, the business will produce a huge increase of over 50 of the vehicles, which is significantly 10 times larger than the estimated growth of the global car market. Considering the details, this prediction puts Tesla in a possibly groundbreaking position. If this objective is accomplished, Tesla's combined production of Model I and Model vehicles is expected to reach an astounding 1.59 million units in just the first 34 days of 2023. By 2023, Tesla's electric car sales are probably going to surpass 2.1 million units. To further highlight the significance of Tesla's projected sales for 2023, let's compare it to some of the industry giants. If Tesla reaches the sales target of 2.1 million electric vehicles, it will not only be a milestone for the company, but it will also mark a monumental shift in the landscape of the automotive market. This milestone is not just a number. It represents a significant achievement in the automotive world. Target must surpass Volkswagen's Audi brand sales figures, which are well known for their performance and luxury. This accomplishment would demonstrate Tesla's increasing dominance in the EV market and show that it can rival well-established luxury car brands. Moreover, Tesla's sales numbers would be closely trailing the phenomenal 2.5 million units that BMW sold in 2021. As a global leader in the automotive industry, BMW is renowned for its engineering excellence and innovation, and its sales figures set a high standard for automobiles. Given the shifting tides in consumer tastes, wherein electric vehicles are more preferred due to their performance and technological development, as well as their environmental benefits, Tesla has a chance to approach BMW's sales volume. This comparison indicates a wider industry trend in addition to highlighting Tesla's incredible growth trajectory. A trend wherein once startup companies in the electric car space are increasingly competing with established automotive powerhouses. This potential achievement for Tesla is more than just a triumph in sales figures. It represents a pivotal moment in the EV industry that could propel Tesla further into the spotlight and redefine its standing in the global automotive market. The implications of this are far-reaching, not just for Tesla, but for the entire landscape of electric vehicles. As we watch these developments, Tesla's journey in 2023 could very well reshape the future of the automotive industry. With a noticeable increase in vehicle insurance registration, Tesla is making considerable progress in the Chinese market. This puts Tesla at the forefront of the market in China, particularly as it gets closer to meeting its full-year delivery targets. Recent data shows that Tesla's insurance registrations in China have increased by 5.4 to 17,600 in only 1 week from 16,700 the week before. These results are especially significant because they represent the 5th week after Tesla started shipping its updated Model 3 to China in Q4, over 114,500 Tesla insurance registrations, a rough measure of vehicle deliveries were made in China, exceeding Q3's numbers by over 3. The growing demand for electric pickup trucks, highlighted by the Cybertruck with its amazing features and adaptability, is likely to considerably contribute to Tesla's growth in Q4. This rise is even more spectacular when compared to Q2, when Tesla delivered a record number of vehicles. The steady increase in the significance of fully autonomous driving technology, which has the potential to completely transform the EV market, is another significant development for Tesla. The core of Tesla's autopilot system is its fleet of advanced sensors, which includes cameras and laser rangefinders. This suite of sensors provides a real-time understanding of the environment. And Tesla's unique position with proprietary data from millions hours of, cars traveling billions of miles allows it to continuously improve its FCD capabilities. Additionally, Tesla plans to introduce this technology in China. Technology is getting closer to being implemented in China, and this might have a huge influence on investors in the sector overall. According to analysts, global equities research expert Trip Chowry claims that Tesla has set high goals for 2023, with plans to sell and create around 1.8 million vehicles in 2023. Tesla is on track for a record-breaking fourth quarter. However, in order to meet this target, the third quarter must finish strongly and the fourth quarter must generate record-breaking numbers. Despite the company's lackluster Q3 performance, Chowry maintains an overweight rating and a $350 price objective for Tesla and anticipates big Q4 results. Although Q4's performance numbers are yet unknown, and there is no assurance that another record-breaking quarter will occur, Tesla produced positive free cash flow and raised expectations for stronger performance in Q4. At number 0, F indicators point to an extraordinary future for Tesla. In this video, we looked at the company's expanding market share in China, which has been demonstrated by a notable increase in vehicle insurance registrations. We also examined the possible effects of Tesla's revolutionary full self-driving technology and its Cybertruck, both of which are expected. It's completely changed the EV landscape. Finally, we took a look at analyst projections that show Tesla's high goals for the next few quarters. Finally, we turn to you, the viewers, to share your thoughts on how you believe these developments will affect the future of electric vehicles. What forecast do you have for Tesla's success in the next quarters? Thank you for watching, and we hope to see you in our next video. If you've enjoyed our coverage and insights on Tesla stock news, please don't forget to like and subscribe to our channel. Your opinions and insights are greatly appreciated.